In this episode, we speak with Satoshi Harris-Koizumi, partner at Battery Ventures, a global tech-focused investment firm with a track record spanning early, growth stage, and buyout investments. Now investing from its 14th flagship fund, Battery Ventures XIV, and companion fund Select Fund 2, together capitalized at a combined $3.8 billion, the firm has raised more than $13 billion since inception. Its core focus areas are application software, infrastructure software, consumer, and industrial tech and life science tools. Toshi, based in New York, leads later stage and majority investments in software companies reshaping industries like hospitality, manufacturing, engineering, and supply chain, among others. I'm your host, RJ Lumba. We hope you enjoy the show. If you like the episode, click to follow.
RJ Lumba is the managing partner of Growth Cap and the executive chairman of Market Insight Media. He is the host of Growth Investor, a podcast featuring today's best investors, executives, and founders. In the minutes ahead, we'll uncover insights and strategies for accelerating growth and succeeding in business.
Toshi, so good to be with you. Thanks for taking the time.
Yeah, thanks for having me, RJ.
I thought where we could start for the benefit of our broader audience is to explain where Battery plays, because, the term of growth equity can go in different directions. People interpret it in different ways. In some cases, it's more mature companies. In other cases, it's earlier stage. And sometimes, certain growth equity firms will play across stages. So maybe you could help us discern, what does growth equity look like from Battery's standpoint?
I mean, it really is the analogy of investing along the S-curve is how we think about it. And it's often, or at least internally, we characterize it as sort of early, middle, and late stages of development. Initial, which is being slow growth, early adoption of new emerging technologies. Then a phase of growth where companies are experiencing rapid acceleration, high, strong adoption. And then any industry and markets, there is often a leveling off or just like maturity. And I would say the uniqueness of the firm is that we do really invest across all those stages, right? So early growth and what you can call later stage growth, private equity type investments. And that does correlate with the growth rates that we see on revenue within these businesses. And they present really unique opportunities because we see emerging technologies where we can catch companies earlier, particularly on our venture side. And that's actually how the firm got started. And then on the later growth equity stage and private equity stage side, which is where myself and our team is focused on, is adopting and investing in what are companies that are already more advanced in terms of market adoption. They have good product market fit, we often like to say. They have customers who rave and love the products and are really looking to take the business to the next level. And in a lot of ways, and I go into that, but that's a little bit of the characterization is both on the financial side, but also in terms of just adoption of emerging technologies. And obviously that has changed with emergence of cloud-based applications, and now all the rage being AI, for example.
And with you focusing more on, say, the mid to late stage, one might think, oh, that could be more competitive in terms of number of investors vying for that company, given that they've proven themselves out, they're scaling. Do you find that to be the case where when you find a good company, you automatically assume these other 5 people are looking at this company and, we'll have to, really win over the management team?
Yeah, it's a great question. There are a lot of levers. I will first say, generally, every year, the industry gets more competitive, right? We've been doing this for 40 years. Firms started, initially investing in early stage telecom investments, Metro PCS and Nextel. Those markets have matured. And so every year we're constantly thinking about how to up our game and finding ways to, win and, invest in what we think are category leaders in each respective markets. And, the way we show that, we kind of pride ourselves on the scrappiness component and identifying real pain points that exist, because every company, every technology company has challenges, whether it's hiring or market sizing or interest in going overseas. We have a really strong presence in Europe, for example, that presents a lot of unique opportunities. And, we aren't operators per se, but we are very involved on board level. And how that manifests is in areas where we can help around hiring, particularly on the executive leadership side, on M&A. I can't stress that enough, where we really do, and when I say we, our team in particular, does a very good job of canvassing the landscape and identifying a company that we think is a platform, a system of record that is here for the long haul, but also identifying relevant products that could be acquired, that offer complementary technology that can be upsold into the install base, or other companies that may service an adjacent market where they have aspirations to go into. And one thing that I've appreciated since joining the firm in 2012 is this element of creativity. There's just so much latitude to be able to find ways that maybe isn't straight and narrow. And I think that has resonated really well with founders, CEOs, because we're frankly willing to go that extra mile and do the dirty work that I think a lot of our peers may be thinking about, but not always.
Mm-hmm. And now thinking about your journey as an investor with Battery, and you've been there over a dozen years. In the early days, when you were trying to figure out maybe like which types of companies you would focus on, and maybe which types of technologies, types of software, et cetera, did it take a while to figure it out, or did you kind of already start to see signs early on? You had prior history and you said like, okay, these are the areas I want to focus on. How did you, develop your kind of sense for where you wanted to really spend your time?
Yeah, no, that's a great question. We often talk about where are there areas where there's greenfield, and then markets, which is, businesses, whether it's manufacturing or supply chain or hospitality, where they're still using Excel or pen and paper. And then where there are opportunities where we can characterize as sort of more brownfield, where they may be using a system, but at this point, they're antiquated. And then the last category being replacement cycle, which is they're already using some sort of piece of software. And it's up to the next generation crop of vertical software companies to win them over and have enough feature functionality to replace the incumbent. I think when I joined, there was a lot of greenfield. There still is greenfield in certain categories, but as you might expect, there has been more innovation dollars going into, in particular, our focus area. My focus area is on vertical B2B software SaaS companies. However, what's exciting for us is there are new emerging core system of record for different markets. And the example I can give you is we invested in a technology business in the restaurant space called Crunch Time back in 2015. They are effectively the ERP. It's a system that is run and used by restaurant managers, both on the site level, but also on the corporate brand level. So what's interesting is probably historically, before we came into that investment, there were different applications that were used on every level. So parent-child type relationship. But with the emergence of obviously, a lot of cloud-based applications, a lot of that logic is built into one system where in the case of Dunkin' Donuts, right, needs to report sales performance, and that needs to get rolled up on a corporate level to understand, which food products are selling. And that actually influences a lot of strategic decisions that are happening on their board level in terms of, certain product categories or certain territories that are performing better than others. And that's all driven by a lot of the software products that we've supported over the years. And so when we talk about, these systems of record, it's not just the workflow, whether it's accounting or managing your inventory, but it's also how many constituents are involved at each level. And that web is only increasing and has allowed for situations where we've been able to drive cross-sell and just wider adoption.
We probably should touch on AI just because it's almost involved in every conversation with investors in the tech space. How do you view AI? I was talking to a CTO the other day who was like, you know what, you should talk about debunking AI, meaning what is hyperbole and, what should people be paying attention to when it comes to AI present day?
Yeah, it's a great question. I would say we are in the throes of figuring it out. We're seeing a lot of new emerging AI-born companies that we are also investing in, particularly on the venture side, that are very early stage. On the later stage growth equity, private equity side, we are certainly seeing AI used as a tool to enhance existing offerings. However, I will say that a lot of the platforms that we're investing in, their core infrastructure is around the functionality. And so I think we will probably over time see businesses that are the system of record that were born with AI features built in. But right now, a lot of these companies that have been started, 10, 15 years ago, they're experimenting with different AI tools to kind of wrap around the core system of record. So I would say it's still pretty early innings. Another example I can think of is we just acquired a business in the health and fitness space called Moments, which was an add-on acquisition to an existing portfolio company. And a lot of their R&D initiatives is around AI to help, small studios, yoga studios, be able to manage text threads, automated responses to booking classes. And that is on the backbone of a lot of AI use cases.
I'd like to move in a slightly different direction here in that, thinking about Battery and its team and folks that are really driving the firm forward, a lot of them have been there for a really long time. You've been there for over a dozen years. It's a testament to, what's been built there, what's the culture that's been cultivated. Can you tell us a little bit about that? Maybe you
Yeah.
have experience having seen other firms or you could draw comparisons, but Battery has maintained a great reputation in the market. You got a great group of people there. So maybe you could shed some light on the internal workings.
Yeah, absolutely. So I joined right out of school in 2012, and I would say what has separated Battery and its uniqueness is this apprenticeship model that has permeated really across all levels within the organization. And it's both embedded in our business. We joke that our model, sourcing and finding deals, it's kind of the longest sales cycle in the world, I like to think, because you're building relationships with founders and CEOs. And these are often multi-decade relationships where they're not willing to look to do something. And there's a matter of trust built in. So when I joined, I mean, I didn't know how to revenue or P&L or anything like that. But if you have a healthy curiosity, people within the organization are willing to put in work so that you build those tool sets and also kind of foster this kind of creative drive to reach out, build relationships with CEOs and develop, one is pattern recognition, which I think, kind of fosters and grows over time, but also finding new areas that maybe the firm hadn't really thought about historically. One example is vertical software, obviously was already a big part of what the firm was doing, but we hadn't really thought as much around payments. And so that was a big area where myself and a couple other colleagues had invested in companies, but also had really pushed the management team to build out payment capability as another revenue stream. And so there's a very strong mentorship culture. We travel together a lot. We go back and forth on what's the outlook for business, what's the trade-offs that we're willing to make in terms of revenue growth relative to profitability in the long term. What's the M&A landscape look like? And so, what I tell people is like, yes, there's obviously working with good companies and entrepreneurs and founders, but you really have to enjoy that process, right, of learning from one another. And I'm very thankful for that because, a lot of it is, there's no obligation to go to business school or anything like that. People want to keep working with you and kind of continue to foster that pipeline and, grow together.
I'm willing to bet there was a lot of challenging moments over a 12, 13-year period, whether it's like, your own personal career or related to deals you're working on, companies you're helping. Is there a particular company that you're particularly proud of when you think about it? Like when you found them or when you started working with them to what eventually came about when you were able to like help them?
Yeah, I mentioned the restaurant business, which I'm, obviously very proud of. Another one is a business called Club Essential Holdings. We made that investment back in 2016. They are a system of record for private golf clubs. And I think, at the time, it was a very interesting business that did the whole soup to nuts, tee time booking to back office accounting for private golf clubs. But there are only 5,000 golf clubs in the United States, and they only pay so much for software. And so there's naturally a question that comes up when you make an investment or you present it to, the IC and whatnot. How big can this business really get? What's the goal, right? What's the end goal, right, for this? And what we realized was, one, they weren't fully penetrated and hadn't pursued a ton of cross-sell within the existing customer base. Two was they hadn't monetized anything on payment processing. A lot of member dues, and if you order a cheeseburger, a lot of times they were giving that away to like the Stripes or the Addians of the world. And then the third was a really robust opportunity and M&A landscape to tell a broader story around software for membership and activity-based centers. So we had, as a result, started with that and then acquired tangential, what we think are systems of record for health and fitness, parks and recreation. And we realized that it was actually a very fragmented and robust landscape. And then as we layered in other add-on acquisitions, we also brought more payment processing volume that we could monetize. So it was compounded by both function of scale that we were able to bring in. And generally, when you have scale, there's goodness that comes with leverage in the model with software companies. And then the other is additional payment volume where you do have more leverage. You can negotiate better rates, and you can obviously monetize more on that volume that comes over. So that was great. We brought in a CEO, Randy Eccles, who's the CEO of the holding company structure. And it's just been a really fun ride. And I would say it's with the thanks of a lot of my mentors within the organization who've seen it, done it. It goes back to this kind of mentorship level monitoring of, I've seen this before, this is what's worked, this hasn't worked, and iterating on that. So I would say that's one example that I'm particularly proud of.
That's a great example. We're heading into the tail end. I'd like to ask one question before my final two. And that is, over the last few months, I've learned that there's a fairly sizable group of people that listen in on this podcast that are in the younger generation, call it around college all the way up into the 30s. What one piece of advice would you give someone who is really looking to get into the investing space and the growth space, in general private capital space?
I would say persistence pays off for sure. And we interview folks and we always have kind of new analysts, associates coming in who understand kind of what the sourcing model is, which is a lot of sales. And the other is there isn't any prescriptive view on how you should kind of conduct yourself. Some people are very high velocity, outgoing, like to, meet everybody in a room or what have you. And then others are very targeted and want to have a private conversation, a very intellectual conversation about, what's the TAM and market size, the future of a certain end market. And there's no right or wrong answer. It's just, I would say, don't be shy about kind of who you are. And there are opportunities to grow as a person and be successful within our industry, having different personalities. And then the other is just persistence, right? Because that is a big part of what we do, reaching out to companies. Half of it is timing, when CEOs or companies are ready to transact. And a lot of it is things that, at a time where you least expect it. And so I think what that means is just having a positive outlook on things, and persistence, I think, pays off. And that's sort of manifested in ways for a lot of people who've reached out to us when we're potentially hiring, where people reach out directly for coffee. And that really does go a long way because it just shows that they're taking initiative.
Last two questions. One is, can you tell us about a person who has had a profound influence on you?
Yeah, no, that's a great question. I would say probably my grandfather. So I'm half Japanese. And so my mom's side is from a small farming village in Japan. He was a high school principal and very community-based, always smiled regardless of what was going on in outside life. And, I think was just naturally very outgoing individual and was very proud of us and kind of the life that we've lived in the US. And yeah, it's somebody I've always looked up to and obviously miss him dearly, but very fond memories of our time in Japan.
Last question. Can you tell us about a charity cause or other endeavor that you're passionate about?
Yeah, so Battery actually has its own foundation where quarterly there's a separate board, if you will, that selects a cause, and then there's a process to which the individuals recommend different foundations. And so can obviously put that on the link of kind of the most recent initiatives. I think the one that we're doing this year is around kind of natural disaster relief and recovery. So I would say that's been a very rewarding experience for individuals because we can pick initiatives, and also the program has been going on for quite a long time now. And we're also being thoughtful in terms of nonprofit organizations where the dollars really do go a long way. So I think we've been particularly proud of that foundation.
Fantastic. Well, Toshi, I want to thank you again for taking the time. This has been a great conversation.
Yeah, thanks so much, RJ.